You see there the opening bell on this Tuesday morning. We all have to remind ourselves multiple times this morning it is Tuesday because the President's Day holiday yesterday. And even though we all took a break from the markets did not take that rest to heart, and they are still declining here. As we were just talking about with Tom Essay a few moments ago, this really seems to reflect this change in sentiment here to the idea, Brad, that the Fed is going to be hawkish. We got a lot of hawkish Fed speak last week in the face of some pretty good economic data.
Yeah, I wrote down Tuesday on my paper as well, just to remind myself throughout the morning. It is Tuesday here, and on the beginning of this trading session, as we're just about 1 minute in, I pulled up this year-to-date chart for our viewers just to remind folks of where we stand right now. And if I'm drawing a line that just goes across this key level here, some of the top that we had seen and the resistance level that we've seen, at least for the Dow Jones Industrial Average, and we can take a look at the S&P 500 and Nasdaq in a moment here, but moving off of that and back downwards here, you've seen this kind of initiate from the midpoint of February over the past couple days here as we got more of that Fed speak there. So in my perfectly symmetrical type of drawing there, you can get a sense, at least right now, of where the market is continuing to really be in reactive mode to that Fed speak, perhaps some aversion to some of the risk assets there. And even year to date here, taking a look at the Nasdaq and the tech heavy average has really been one of the better rebounding stories coming off of the declines of 2022 here, still holding on to gains year to date of about 11%, but down here on the day out of the gate by about 1.3%, and the S&P 500 as well. And there you're seeing over the course of February that move lower. I wonder if I have a month-to-date chart. It doesn't seem like I do here, but I'll pull up a 1 month chart. How about that? And yeah, over the past month, still net higher by about 1.7%, but not nearly in terms of the gains and the growth that we'd seen over the course of 2023 thus far. Here today, though, down by about 0.9%. And then just briefly, let's pull up a heat map view, as we always do, of some of the sector activity out of the gate this morning. You're taking a look at, oh, there we go. All right, went back. Had a glitch there for a moment, but energy is the only leader this morning that's up. Flat, but to the upside by about 0.1% right now.
Yeah, some ugliness there. In
discretionary.
Discretionary this morning. And what's interesting about that is that's not the index that the likes of Walmart are in. Right? They're in staples.
Yeah, and some of those discretionary categories, though, that they did shout out weakness in, where it was home, it was apparel, electronics, all of that weakness, though, that having some representation within that consumer discretionary sector, you're seeing those declines actually be the biggest mover to the downside here out of the gate this morning. But still, higher year to date in this broader rebound that we've seen for consumer discretionary, higher by about 14% right now.
Yeah, even as that rebound has stalled out.